Well, hi everybody. Let's talk about the day today. Now, there was a week close on Friday for the markets, Nifty, Bank Nifty futures, and then again we saw what happened on Monday was actually a follow up. So it was expected that Monday we are going to see some sort of pain, some sort of selling. And then what I found interesting was that in terms of there was selling pressure, yes, but then also actually bears they actually have squeezed the bulls in terms of sectors. Now I'm naming the sectors here, and those sectors are realty, metals, small caps, mid caps, again PSU banks. So these are normally retail heavy sectors. So I'm expecting two things here. Number one is that I've seen yesterday in the second half there has been some short coverings in the banks. Overall, the index futures they have seen long unwinding, which means the open interest has come down. Some portions those actually have been shed, but that's about September month. October month again is still actually showing very good premium, good sort of portion build up there. So you're talking about expiry this week. Tuesday, Wednesday, Thursday, 3 days of expiry. I think at present, bears actually the people who are selling they have the upper hand. So more than likely you're going to actually see some sort of pressure, some sort of effort to squeeze actually the last penny from the bulls. So perhaps now the fight is about Nifty 9950 as a resistance, a very strong resistance now, but also 9780 and 9720 as a support levels. Now the key point here would be what actually can make Nifty cross 9950 again, and I would think Bank Nifty and oil and gas, those two sectors actually should outperform if it has to be. What we are seeing right now is almost that oil and gas stocks they actually are on the verge of support. If we see any sort of selling pressure on OMCs, perhaps they can actually fall from the support levels. Though fundamentally, those stocks, companies are going to have absolutely stellar second quarter results. So perhaps that is actually we should keep that in mind that this could be very short term in nature because the way markets are moving towards expiry perhaps is actually more a reaction towards that. In terms of our markets preparing for a very deep cut, 9,000, 9,400, 9,200, as we always start talking, I would say that Friday was a weak close, indicative of 3 to 5 days of negative sentiment or weakness in the markets. So we should be bracing for that. But then the way actually positions are being written off or bet, that actually tells you that traders right now, what they're doing is they're piling up long puts, and that is usually indicative there is some intermittent weakness. But I'm quite surprised that you normally actually pile up puts when you actually really are short term in nature. So what is actually more indicative to me that traders actually they don't have conviction that the markets are going to fall a lot. It could be short term in nature, and that tells me that you have to be really watchful if you wanted to be aggressive short seller in this markets. You have to be really careful because the first round of selling has been absorbed. Some sectors, like if I just see some sectors, like take a look at some sectors like metals, realty. They actually have bounced off from the first support levels, and you will have to actually see them sold off again and then break those support levels. Some of the sectors like FMCG, 2 to 3% away from their critical support levels, oil and gas right at the support levels. So those sectors again will have to contribute for the markets to fall to 9700 levels. The range clearly has expanded to 9700 to 10200 or 10250. From the last time range we were talking about 200, 10,000, 10,200 or 9900, 10,200. The range basically has expanded to 500 points, and that is primarily based on the premise that at present the markets are almost nearing 9700. We are still more than 100 points away from that, but that's where actually the more risk lies right now. Now for Bank Nifty again the support is 23,900. If you break that we go straight to 23,300. So that's a big risk, and at present I think it's more about the private banks also because again they also are very near their support levels. Resistance 24,540, and the way I saw trade happening in Bank Nifty yesterday, it told me that traders are quite smart. They are believing that 23,900 is unlikely to get broken unless and until there is very aggressive selling happening in Nifty. So the word here is, as we're talking about trade setup, that if you're a short seller, be very cautious, be nimble footed, because at present consensus opinion is not about deep cuts. So, number two, if you're really concerned and have positions in the markets and are affected by the correction at present in the market, be cognizant that before expiry there is going to be high volatility. So perhaps you could get caught on wrong foot. So just be cognizant, and if you're looking for some good stocks to actually look for in this dip, then I think you should always do so because there is enough DI flows out there, enough money coming in there. So just be cognizant about that also. A lot of stocks, again, we're going to talk about the stocks in my next video. This is about markets, and that's what I'm telling you, that two things very clear: long put accumulations, indicative that 1 or 2 days of very quick money is what traders want to make and then get out. And number two is, I see a decline in call writing, and it tells me that markets basically are not betting for a large fall. I want the markets to tell me what they want to do today. So we are going to watch Tuesday and then basically have a much comfortable picture around that. So far, it's a cautious day. It's a day when markets are going to test supports. Markets could drift lower, or markets basically could start inching higher. Second half yesterday, there was definitely short covering. So don't be aggressive on either side. Just be watchful of the markets. Take care.